would have failed.
Alright, what's good everyone? Hope you guys are all doing well. We're back again today for another video covering how I made just under $20,000 trading NQ futures. So before all, I want to apologize if I sound a little different. I have been sick over the last week and remain to be sick today. And I just overall have been trading less. Monday, Tuesday, Wednesday, no trades are taken. And that's something you guys have to keep in mind when you are, in low probability conditions in your real life. Because when I am sick, I know that my decision making is going to be slow. I know I'm going to be more lethargic. And if I know that, there's no reason for me to put risk on the table. And it's not just stuff like that, being sick. It's when you don't get enough sleep. It's when you are, driving, you're at work, you're at school. It's stuff like that where you have to, make the decision to not trade. Because there are going to be times where you should trade and there are going to be times where you should not trade. And I just want to share, my experience, my understanding as to when I do and do not trade, because this is essentially what's going to make a profitable trader versus a unprofitable trader. So now how I made $20,000. So live account, half size, hit TP1 followed by a break even as I was targeting all-time highs on my live account. Then my PA accounts, I completely TP'd. Same thing on my XFAs, I completely TP'd at what was the high day. $12,500 on the PA accounts, $4,000 on the XFAs. Just for the sake of proof, here is the account report for the PA accounts. Only reason I show this is just because I know people are like, not to me specifically, I haven't seen anyone say this to me, but I see people in general, just show profits that with no proof behind them, no executions, none of that. But as we can see here, TP1 was at the data high. You can go look at your chart. The data high was in this trade with 2 minis on each account. TP1 at the data high, TP2 at what was high day, and here's the full account report. But what I was getting at was, you don't know what people are actually taking behind the scenes unless they actually show you. Anyone can full port their PA accounts, 10 minis, take a quick 12-point scalp, and make $2,500 on a account. They can do that, and then they can claim they made some, had some crazy bottom or top tick, and then, just completely fake it. And that's just why I showed the account reports every here and there, just to prove you guys that that's not the case for me. But anyways, 2 trades today, AM session long, PM session long. The trade we're going to be covering in depth is going to be the PM session long, as we can see right here. I had only taken this on my live account, reason being, and the reason I would take this after already making a ton in the AM session is because on my live account, like I said earlier, nothing was taken on Monday, Tuesday, or Wednesday. My live account I was already in with half size, as well as the fact that I got break even on my remaining contracts. So my live account wasn't all that much. So due to that, I was willing to, put on more risk later in the day, just as 1, there was a clear opportunity, and 2, I did not reach my quote-unquote profit goal for the day, for the week on my live account, but this trade ended up helping me get there. And we're just going to be breaking down this trade specifically in depth. It follows the exact same logic, the exact same model as my 30-minute Power 3 model, just within the 4-hour Power 3 window. But anyways, we're going to be breaking that down in depth. I'm going to show the recording right after I'm done talking here. Then after the recording, we are going to be showing or breaking down in depth how it came to a bullish bias, what was my general liquidity, what was my entry model, and so on. Just showing all the confluences, sharing everything. So hope you guys enjoy. So, hope you guys enjoyed that little recording. Now we're going to get into the in-depth breakdown regarding the PM session trade I took. Now, before we get into the PM session trade, I want you guys to understand, if you are watching my videos, you do want to actually understand how I trade in depth and actually understand my entry model in depth. Feel free to check out the link in my bio. It'll direct you to my WAP. It's literally just $75 a month. And I teach you everything regarding how I trade. Everything regarding Po3, everything regarding market maker models, and everything regarding QT. I teach you guys how to implement QT. And the biggest thing to understand about QT, and that's been a huge impact on my trading recently in terms of precision. Biggest thing to understand with QT is it's not its own thing by itself. It's not like we're switching from ICT to support and resistance or indicators. No, it's literally just I like to say it's just a subsection of ICT. The same way Po3 and market maker models is a subsection of ICT. It's the same way QT is. So I think of it like this. Market maker models is price. Po3 is a mix of time and price. And then QT is heavy on the time and then refines how we trade Po3 and market maker models. That's how I get such precise entries week after week. But anyways, I break it all down in depth. I've dozens and dozens of QT videos, as well as breaking down my personal model in depth within multiple different videos, as well as tracking all my trades, breaking them down in depth, as well as doing daily calls every single time I take a trade. Now, enough of that, enough of any promo. Now getting into what I said going into the day. So we're not going to be covering the 30-minute Po3 trade I taken in the AIM session, but I do want to post that. I do want to post what I ultimately was looking for going into the morning. So I did my analysis here. I broke down in depth exactly what I'm looking for, what is presented, and what I'm looking for. So higher time frame is extremely bullish. We're right next to all-time highs. I'll only be looking for longs today, as I posted here, pointed out there. And I said that we have SMT, the previous 90-minute low. However, this is 30 minutes prior to New York Open. And as you guys know, I did not take any trades prior to New York Open. Then I stated that we have another significant low beneath us. And in summary, I stated that I'm going to be looking for longs up to all-time highs. Based off delivery throughout this entire week, we have disrespected every bearish setup. And it's only logical to assume that price is going to attack all-time high today. I was wrong with price seeking all-time high today, but I was correct with us being bullish directly going into the morning and ultimately what led up to my trade. So anyways, I said that we want to see the significant low that I had pointed out and that we reversed off of going into the morning. Well, I'll say it. We want to see the daily cycle Q2 low to send us higher as well. And for reference, that was this specific low right here. Daily cycle Q2 low, midnight right there. And well, we reverse off that, and that is what I had taken my long position off of. So that ended up playing out in the AIM session. This is just me showing what I post every single morning, every single day. I post some bias, what I'm looking for in depth, and then I build off of that in my intraday commentary channel after New York Open. Anyways, now into the PM session trade. So as we know, my AM session trade had hit TP1 on my live account, followed by a break even on the remaining contracts. My PA accounts and XFAs had hit full TP as I completely TP'd at that what was high day. Going into the PM session, I was not on charts during any of this sell-off nor this accumulation. I was at the gym. I came back about 15 minutes prior to this reversal. At about 2:30, I'd open up charts. I'm like, okay, my live account really did not make much this week as I taken a very, very small loss yesterday, just minus 17 points. And then today, my trade hit a TP1, followed by a break even on TP2, while also being in with half sizing. So I'm like, okay, I'm going to be looking for a PM session trade just as I had taken nothing Monday, Tuesday, Wednesday, and everything I just explained before then. So I'm able to validate longs, or I'm able to validate taking a position even though I already profited early on in the day. Now, what actually supported longs? So as we can see here, you can see recent 50-minute structure aggressively sold off. And you're going to see this and think, why are you taking longs when price is bearish? Simple answer is that we are not bearish. Just because you see a few down close candles on the 50-minute time frame, that does not make price bearish. You need to zoom out. I posted about a month ago on the daily time frame. I think it was about specifically right here. I pointed out that we are currently within a daily market maker buy model. In fact, I posted this all the way back here on X, if you actually look back there, and then updated on it within a YouTube video right here. But anyways, I posted that about a month ago on my YouTube. You can go back to that video and watch it. But anyways, we're in a daily market maker buy model. A higher time frame is very clearly bullish. We're drawing towards where? The original consolidation high, which is the all-time high. Going into the PM session, we had engineered liquidity right beneath all-time high. As we can see, all-time high is at 869. We engineered liquidity at 825, 40 points beneath all-time high. So higher time frame is extremely bullish, and we still have a clear external draw on liquidity. Daily is bullish, 4 hour is extremely bullish, and you might see this, you might think, okay, we have an unbalanced range below with multiple unmitigated imbalances below us. Why should we not continue selling off to rebalance the range and then go attack all-time high? The reason we would not do that is because we are in a bullish trending market. In a bullish trending market, and a lot of you guys get mixed up on this, but in a bullish trending market, we focus on higher time frame PDRA, lower time frame crack and correlation. You are not focused, because if we are actually in a bullish trending market, you are not going to see significant retracement time and time again. Our significant retracement was right here. Our significant retracement was this entire sell-off at the beginning of the year. You're not going to see another significant retracement like that after we already had something like this. It's incredibly funny to me that you guys think that's going to happen. It's like you've not studied ICT at all. You've not studied anything he's taught us if you were still thinking like that. Our focus in a bullish trending market is higher time frame PDRA, lower time frame crack and correlation. But as you can see here, 4 hour time frame, 4 hour for value gap, specifically a 4 hour BISI gets traded into where we reverse. However, we do not trade into it on YM. That gives us a bullish crack and correlation. So boom, we already have a higher time frame PDRA, a higher time frame crack and correlation. Dropping down to a 50-minute time frame, the proper time frame alignment off of that 4 hour PDRA would be the 50-minute. Now, however, that crack and correlation on the 4 time frame, that's not going to constitute a reversal. It can add confluence, but it is not time based. What is time based is the SMT that we had right here. Now, like I already talked about in previous videos, I'm not going to be going in depth on significant highs and lows or significant SMTs. I'm not going to be breaking that down outside of what I offer on within my server. I'm just not going to do that. There's no reason for me to. I will do it in the future, but as of now, you guys will have to collect your own data and your own understanding on what makes highs or lows significant or not. But put it very simple, we had formed SMT with, and let me make sure. Yeah. So NQ, ES both manipulate beneath this low. YM fails to, giving us a higher time frame, significant SMT, we'll say. Now, this specific low would help us remain focused on the 50-minute time frame. On the 50-minute time frame, what would then validate us to drop down to a 1-minute time frame and find a 1-minute entry? That would be a crack calculation on the 50-minute time frame. And as you can see here, ES and NQ both soup the previous 50-minute low, while YM fails to. Now this specifically this is what constitutes us to drop down to a 1-minute time frame. However, before going into this trade, we actually have to have a clear draw on liquidity. As we talked about earlier, we're in a very bullish market, so we have clear narrative, and we have a clear draw on liquidity being at all-time highs. However, we have to understand that we are going into the final hour of the day, and all-time highs at 869 is approximately 270 points away. Do we really think in the final hour of the week, in the final hour of the day, that we are going to pump up another 270 points at the end of the week, at the end of the day? No, it's just so unlikely to happen. So we are not going to be drawing towards all-time high going into this trade. So we need to find something else. And as we can see right here, even if we're going to target high a day, that's still, very significantly far away. That's 220 points away. And so that's unrealistically going to be hit. Even though it is a significant high, it is not a reasonable draw on liquidity. So next we can look at something internally. And obviously right here, there's no significant high internally. However, when you draw a range, you can see from high day to low day, we're obviously very unbalanced. Due to that, that gives us a clear drawn liquidity being EQ the range. Now, in my video, I had actually drawn EQ from this high to this low. This is a invalid range, and not the proper range to draw from. And now let me explain myself. The only reason I drew it from this range instead of the proper range from high day to low day is simply because I wanted to make sure that my trade would hit TP. I did not want to risk anything. Reason being is because, again, reference the trade I had taken earlier, the 30-minute power through long that I had taken in the aim session. Look at the delivery throughout the aim session. It was horrible. It was super slow. It was lethargic. We had really struggled to deliver buy side throughout the entire day. We had a few decent candles in the aim session, but that was accompanied by a ton of accumulation, a ton of chop, failing to take out highs, and then we ended up selling off. And due to that, I wanted to ensure that I would not be caught up in the exact same scenario as what I did in the aim session. So I made sure to just target the utmost low-hanging fruit that could actually cause price to reverse. And that was EQ of this range. Now, regardless, we did actually end up hitting EQ of the proper range. So I would have ended up being fine, but I just wanted to be safe and lock in profit. Now back to my specific 1 minute entry. So we had our validation on the 50-minute time frame, and that validated us to drop down to a 1 minute time frame, as we can see here. So on the 1 minute time frame, not here, but once we soup that previous 15-minute low right there, when we do this, it's only at this point that we can then validate an entry on the 1 minute time frame. And as you guys know, as I've taught in previous videos, my entry model is a CISD. And we can see right here, I'd entered off of this CISD right here, and that is literally all it was to it. We had a higher time frame PD ray, we had SMT with a significant low. It was a cracking correlation with this higher time frame PD ray. We had a lower time frame cracking correlation, and now we had our lower time frame CISD, and that was my entry. And that's literally all it was to it. I was only risking about 25 points to make about 84 points. So just over 1 to 3 risk reward, 1 to 3.5 if you want to be specific. And this is exactly how the trade went, as you guys watched. Now, you're going to look here. You're going to see all of these previous 1 minute CISDs. It's this specific criteria that you saw at the low of the day, which can validate a 1 minute CISD. All these 1 minute CISDs prior to this one right here are invalid. They are manipulation. They are engineering liquidity, because they did not see the proper criteria that I had showed you right now. They did not have the exact same criteria back here, they did not have the same criteria up here as we saw down here. Now, use this video, use my previous videos as a reference as to what I'm talking about, and hopefully you guys can probably implement that so you guys do not make the same mistakes in the future. But that's everything I wanted to cover today. Again, if there's any questions regarding what I talked about, any of that, let me know. But that is just a general breakdown of how I made just under $20,000 today trading NQ futures. So I'll see you guys all in the next video. Until then, have a great trading, great rest of your month.